All right, well, that's fantastic. I've just been chatting away for ages. Uh, that's fine. Listen, I'm recording the session as I always do anyway. So the beginning of that, I'm going to leave on the recording. I can't remember exactly what I've said. Ultimately, the markets at the moment are going to carry a tentative warning for trading activity this afternoon. That is predominantly because the US has attacked Iran again. So obviously the negotiations are going well, and we are in the midst of having a slight volatility strike as a result of those attacks. Now the US markets have taken a bit of a dip, whilst the oil markets have been having a bit of a rally as a result of this. It's not been as extensive as I thought it might be, but the markets this week have been so tired. I'm not really surprised that they're not reacting in a little bit more of a larger or dramatic way. So yesterday's the other thing I was saying as well is yesterday's US session was a washout, and this morning's European session did not get much better. I did the European session this morning and felt like it was a bit of a waste of time getting up that early, to be honest, to do the session for you guys, because this is what happened during the during the European Open hours. We had a little bit of a blip, and that was it. The market ranged the whole way through. So it is a shame. It is a little bit of a shame. But as always, got to try and look on the bright side of things. This is a cycle. It will come to an end. We have to weather these contextual environments in the markets at the moment so that we can reap the rewards on the other side. Or so we keep telling ourselves, eh? Just feel like it's been day after day after day now. But anyway, we are still, at the end of the day taking a profit from the market, and it is slowly creeping up. So we just got to stay focused on that. But yeah, it was very, very poor, very, very poor price action throughout the majority of the week this week. Looking at the gold markets, we are not looking at an exceptionally high level of trading volume hitting us this afternoon. It's very much range bound at the moment. We've completed the market report position this week. So we got the breakthrough of the 42.40 area. We've seen the price down of 41.20. That was the market report trading opportunity done and dusted. But there is no trading opportunity for us from this point on, as the market is continuing to range. Tony Tone, this year has been tough. Yes, this year has been the quietest year, I would say, in the last decade so far. In terms of consistent trading volatility. Now, obviously, that is a bold statement, but I'm not talking about Monday, Tuesday, Wednesday, nothing happens, and then Thursday we have a 1,000-point move. That's not what I'm talking about, because that's what is made up 2026 so far. It's been 80 to 90% completely flat, followed by these completely random and sporadic volatility strikes as a result of Donald Trump. And that's really what it boils down to. Isn't it? That is what it boils down to. And it's impossible to tell what the man's going to do. There's no kind of rhyme or reason to anything that he does do. And I think there's a few people in here who have touted the insider trading thing. I mean, it's basically what happens. It's basically what happens. He's very open about it. It's like he'll talk up a story or talk down a story to make an asset price drop or fly, and get all of his mates to pile on board and buy loads of it, and then boom, U-turns on whatever it is that he's just been speaking about, and the markets flip out, and yeah, they go and take their profits, isn't it? It's just one big Republican playground at the moment, but there's nothing that we can do about it. We have to try and do what we can do, and we have done over 10% in a couple of the months so far this year. We are up over 20% annual net return, which is great. Even though the day-to-day feels like a right slog, and it is, make no mistake, the gains still can be had. Now, they're on no way shape or form are they like last year. No way as good as last year's. But we're also, coming towards the latter half now. There's the end of, or so we bloody hope anyway. Keep our fingers crossed of Donald Trump. And once we get him out, then we are looking at a relatively more stable and consistent US. And at the end of the day, guys, as much as we, as much as some people may not want to admit it or whatever, the US is the powerhouse, the fighting force behind the markets that we love and we trade. The UK obviously is the economic capital of the world, that's what they say. But seriously, it is the US first and foremost that controls everything that happens in our markets. So once we see some consistency back in the US, once we see some consistency with their economic policy as well as the other side of things, the White House administration is what I was alluding to there, then we will see that kind of consistency and that balance in the price action in the markets, as we have done for the last 5-6 years. And also I know it all seems very much we're like bogged down, day to day as well when we're doing this. But make no mistake, we knew it was coming, didn't we? We all sat here at the beginning of the year and said, "Here we go." We all knew it was coming, even not at the beginning of the year, even before that, when Trump got back into power again. We all said it was going to be tough, so we can't pretend like we didn't know it was going to happen. We've just got to keep pushing forwards, and take the little wins where they come, and just try to avoid this big amount of mess as much as we can. Now, anyway, enough of that. The pinnacle of this afternoon, ladies and gents, aside from my dogs going ballistic downstairs, is we've got not much to really play on here. So that was Monday there. So yeah, we've not really got much to play on. The FX space hasn't really been performing too well. We've got a couple of decent moves, as I said this morning, in the Euro Oz there as well. But the Euro NZD missed our sort of alarm here. We wanted to get it back down to around 197 before we could buy back in to around 199 plus. 199.66 is what it's trading at the moment. So that's quite decent. That's actually not too bad, is it? That one right there. Got the decent breaker structure. We got a break close retest, and we got the fresh BOS just taking place here. So that looks like quite a nice long. Take it up to 2002. I want to stay away from this stuff as much as possible. Our metal markets, there's nothing I really want to get stuck into there, not at all. Energy markets, hypersensitive to anything that happens between the US and Iran, and bearing in mind today we've just seen the US attack Iran again. So I feel a little bit cautious. I think a little bit's probably being very polite. I feel absolutely cautious about trading anything like this now. So I'm probably going to give that one a miss. In fact, I guarantee you I'm going to give that one a miss. It doesn't make sense from a risk perspective. Same with natural gas. We've got some decent swing highs and lows here. Yeah, so if you're a scalper, natural gas is definitely not the asset you want to be scalping, because it's very, very expensive. However, if that is what you were doing, then there's definitely some decent swings, but that's not what we're after. We're after the consistency. We're after the big moves. We want the move from liquidity high to liquidity low, from premium to discount. We're not getting that. We've got to deal with a bunch of this chop in the process. So there's nothing really there for us on that front either. And then it really does push us into the US indices as our sort of last available assets to trade today. Now, all these indices are going to look relatively the same as a result of this afternoon's geopolitics with these little downward pushes here. It's not really too significant though, is it? But I would be looking at closing and filling the gaps between the breaker structure and the liquidity points below on all of these. So the US 30 Dow Jones, for example, is looking great. We've got a break close retest currently taking place. We've got big liquidity down at the floor there. I would be saying to myself, right, breaker structure point, that's probably going to be perhaps there. I would say it's had one go before. It failed. but they're decent enough odds for me. I'm going to go for a short between that area there and target profit down at the lows. So something like this. We've got the stop loss, I would say, around about the 50% point. It's going to be a 1 to 3. Absolutely lovely little trade idea. The other one is a breaker structure above the highs. We do have the 1 and the 2 there. So then what we'd be doing is looking for the long, which would be above here. Targeting the highs up there. And the stop loss for this one, again, is kind of 50% point between the structural point and the liquidity. And that's going to yield a 1 to 2.62. Now, ladies and gents, this is a big no man's land. Okay, but what I'm hoping is that it accounts for any potential fake outs that we may witness. Now, of course, the short is much closer to the current price than the long, so we're definitely not going to get wicked into a long that we don't want to be. But nevertheless, it is a very nice wide no man's land, so I'm hoping that once we do get one of these trades that triggers, it should be a straight shot to the target profit. Right, next up, NAS 100. I'm not really a fan of the NAS. Yesterday, the NAS was the only one that came up to hit a TP. But I'm not actually a fan of it today. Not really. Not when I'm weighing it up against the others. I mean, the US 30 Dow Jones actually looks pretty good. It actually makes perfect sense. Very clean, clear margins. The S&P 500 is another one. The S&P 500 short, in particular, looks really nice. We've kind of just broken structure at the moment. But I think if we can kind of sit around this area in here, that would be good. We have literally on the current candle had a stab at it, but I'm going to try and ignore that just because of the fact that we've had that news event. So short, probably just about the point where the low, sort of the lowest point came to, and then the stop loss for this one, bring that down to there, and that's going to yield you guys around a 1 to 2.5. Really nice little trade. There is long availability on the S&P today as well. Really beautiful little breaker structure in there. That's the structural point for the breakout. We've got nice long opportunity, target profit. You got your stop loss at about there for a 1 to 2.3. Really nice little trade, that one. So we'll ping that one out as well. And yeah, that's about it really. I mean, I wish there was something more to chew the fat on, but honestly, team, there just isn't. You know, there just isn't. USD CAD finally went for a breakout that was worth looking at. Started at 6 a.m. this morning. And we ranged all week. Right until 6 a.m. this morning where we've had this little run. Just wondering if that is the breakout, the break close retest. It does look like it is. So there's a possible break close retest there that's happened, and also another one on the Euro NZD, isn't there? USD CAD and the Euro NZD. This one. Can't take the trade where it is at the moment, but I tell you what, I would probably be interested in a Euro NZD long if the market came back down to liquidity and broke structure again for the second attempt. Yeah. Yeah, I think I would for a 1 to 3. So the market has to come back down. It has to buy into liquidity anywhere within this area. It comes right down in the middle of the circle here. And then comes back up. Trend continuation opportunity, breaker structure entry, 1 to 3 risk reward. And doesn't look too bad. Whoops. Yeah. Yeah. Yeah, I think that's about it, team. I think that's about it, really. There's nothing else that I really want in my portfolio at the moment. The US trades, even them alone, it makes me feel a little bit cautious just because of what we've learnt today and what's been going on. There is a risk to everything that we're doing right now today until the dust settles. So, you know, pay it the necessary respect. As a saying I haven't used for a little while, but it's one that I do enjoy using. Pay the markets the necessary respect. Big news today. They're all going to be tentative. We know the markets are tired out. We know they're exhausted. They are going to be heightened. You know, the investor sentiment is definitely going to be heightened at the moment in terms of its sensitivity to anything to do with the US and Iran. And you know that if the attacks happen now, the social posts, the press conference, the news posts, Everything is to come. And that's going to be coming over the next maybe 1 to 6 hours, which is going to cause upset and stir in the markets. So let's do our best to get in and get out as quickly as possible and take our winnings. If it looks as slow as hell, if it looks like it has done all week where nothing is happening, then don't be afraid not to trade. Just don't trade. It's as simple as that. Just shut down the PC, call it a day, and we'll get back to it tomorrow. Get back to it next week. I'm on annual leave, by the way. I'm still providing the morning session this morning. Sorry, guys. Tomorrow morning, I'll be on first thing in the morning for the European session and the flashback to review the week, of course. But I am on annual leave on the Monday and the Tuesday after the weekend. I was going to give you a heads up tomorrow anyway, but yeah, I'm on annual leave the Monday and the Tuesday. Even though the chances are I'll probably still provide something on the Tuesday. But yeah, anyway, we'll get to that. Anyway, right, so I'm going to wrap things up there, team. So I will catch up with you throughout the day. Good luck out there in the markets, of course. Please take care of yourselves. Don't go rush the process. We've got the plan. Let's stick to the plan. So have a good one, and I'll catch you then. Cheers, guys. Bye-bye.